morning. This is Niaga AWANI with me, Ibrahim Sani. We continue on today's coverage with the Chief Economist of Juwai, Shan. Saeed. Shan, the markets are in turmoil with S&P 500 down 20% year to date, and the Fed is looking perplexed. Jeremy Grantham, the well-respected financial market strategist, predicted a near-term recession and stocks plummeting. I know that you follow him quite well, and you have made the recession forecast in your April 22 newsletter. And where do you think we're going to go from here, particularly when it comes to the global markets?
I think the way the markets are shaping up, we can expect further correction. As you rightly pointed out, Germany, I follow him big time. He has already made the forecast of a big time recession and markets plummeting. Look at S&P 500 is down by 20%. This is the worst performance of S&P in a stretch of 20 years, and the market continues to take a lot of correction. Look at Nasdaq; it has taken a correction of 29% year to date. So I expect the markets to stay volatile, and the way Fed is panicking, it will create more shenanigans in the market. So the markets will continue to stay in turmoil, and this turmoil is not settling down very soon.
In the latest report from BOA, it talks about shocks in the economy and the impact on the global economy. How do you see that, and what's the market fear you think is going to impact asset prices, particularly when it comes to falling and credit markets cracking?
I think I read the report from Bank of America. There are three shocks that are coming. We have already put down in a newsletter for June. One is the inflation shock, one is the recession shock, and you have the growth shock. Whenever Fed has raised interest rate, it has created shock in the economy in the form of dismal GDP growth, and that is happening right now. The credit market is cracking. Look at the debt market is also, in a turmoil. So in the last 9 months, the debt market has moved from $18 trillion of negative yielding debt to $2.12 trillion of debt. That clearly signals three things. It signals liquidation, deleveraging, and default. So the markets are in a very precarious situation, and the way Fed is playing the market, I don't see the markets are settling down very soon. There will be a lot of shenanigans, and the markets are whistling past the graveyard, and markets are punishing the investors this year. And the investors have again misread the market in US.
Shan, not too sure if we got cut off, but okay, let's move on to the next one. The idea here is whether or not we can fight the recession, or do you think the game is over for Fed? Do you think that the stronger dollar, particularly on major currencies like the yen and other safe haven currencies, do you feel that this is going to help in the US fighting hyperinflation or even inflation? Basically, I'm asking you whether or not you agree with the strategy from the Fed.
Ibrahim, I think it's quite an uphill task, because you can only fight recession when the discount rate is between 4 and 5%. If you recall 2006, the Fed fought recession at that time. But right now, I don't see that recession can be fought at this point of time. So the way the markets are shaping up, I think it will be quite an uphill task for Fed to fight recession.
Shan, investors have lost $17 trillion in the global equity markets thus far. Stock prices have been hammered by forces that appear in nearly every cycle. And of course, items like rising interest rates and slowing growth is also on many of these investors' minds. There's also idiosyncratic ones, including the rapid return of inflation after decades of low ebb, a wobbling Chinese economy, and a war in Ukraine that is continuing to shock the commodity markets. Everyone is on the edge as stocks fall further. My personal question would be also on the tech stocks. Some of them have dropped as far as 60 or 70%. Do you foresee any recovery in the short term for the equity and bond markets globally? What would be some of your global outlook?
I think you're absolutely right. Tech stocks have taken a huge beating. If you pick up Wall Street Journal as of yesterday, Apple has lost $759 billion. Alphabet has lost $487 billion. Meta has lost $405 billion. Microsoft has lost $624 billion. Amazon has lost $634 billion. And Tesla has lost $517 billion. The way the markets are moving, we at Juwai IQA expect the markets to go down further by 10 to 15%. Fed is going to raise interest rate by 50 basis point next month. And the way the markets is banded about the outlook for interest rate, it could be 1.9% more by end of December. That will again create a lot of uncertainty. Investors are, as you rightly pointed out, are already on the edge, and this will create a huge turmoil and uncertainty not only in the equity market, but it will have a ripple effect on the other asset classes. So I expect recession to come in, not in 23, maybe by Q4 2022. Markets will stay in turmoil, and we at Juwai IQI we already shared with our value investors 47 to 50 billion dollars will be wiped off from the equity markets globally this year.
Shan, final question to you. Is this Davos is currently happening? There's a lot of talks on how the global leaders are meeting face-to-face for the first time in 2 years. Do you think something tangible can come out from this meeting, or do you feel that this is more lofty ideals of people talking on top of a mountain in Switzerland and then they go back to business as per normal? What would be some of your ideas on WEF?
Ibrahim is just good for networking. Nothing will come out of this Davos session. As you rightly said, people go there to see the mountains, nothing comes out, nothing tangible, no substance,
But the mountains are beautiful, Shan. The mountains are extremely beautiful. It's a spring. I'm sure 1 or 2 ideas would come out, no?
I don't think so, because if you pick up 2 days back, Financial Times, deglobalization is gone, So nobody is interested in talking about trade or commerce. Countries are becoming protectionist. Look at the food crisis that is coming. A lot of countries are banning exports. So I think globalization is gone with the wind. Davos will not produce any substance. It's good for networking.